Yeah, well, even recently, I mean, you weren't thinking really about Bitcoin until 2020, and it seems like you've really done well on the fiat system. So, I mean, why did you start to think that there's an issue with it?
I did well creating my own company, and I had other interesting ventures that I launched, like Angel and Alarm. And then I was an early investor in all the mobile wave companies. So I did well with Facebook and Amazon and Apple and Google and the like. And I have no complaints about that. I think that when I got to 2020 in March, my thought was the big tech trade, it's no longer unique. And everybody agrees with me that Apple, Amazon, Facebook, and Google are digital dominant monopoly networks. That's not debatable. It would have been a debate in the year 2010. And then it was, so if you're 10 years before everybody else, then it's good investment. I think the best investments are when you buy into a technology trend that everybody needs, nobody can stop, and nobody understands. And that would describe Facebook before they came public, or Twitter before they came public, or Amazon back in 2010 or 2011. They were already 10 years into their run as digital retail. There was no competitor, but 98% of Wall Street was hating on them. They don't make any money. Amazon doesn't make any money. How can you buy Amazon? They don't make any money. Well, one day everybody will want to order things from their smartphone, and they're the only app's going to run on a smartphone. So when 5 billion people have a smartphone, then maybe you want to own the icon, which stands for retail on the phone, and then everybody's money is going to squeeze through that icon. So those are good investments then, if it's obvious it's going to happen, when there's so much momentum and inertia, you can't stop it. But when people still don't understand it, I would say by 2020, everybody understood Amazon. Like, if you didn't, how could you not understand Amazon? You were locked in your home and you were going to starve to death. And so that was the year when all the late adopters downloaded the Amazon app and got an account. You would have had to be really creative to not use Amazon. And and Google's the same way. It's like, if you can't go to the movies and you can't leave your home and you can't go to school, then maybe you discover streaming video. So I think Amazon, Apple, Facebook, and Google, their transition from being fast growing digital innovators to being quasi technology utilities that are almost monopolies in their own right, that transition was 2020. So at that point, I looked and I said, well, are those things going to go up by a factor of 10 from here? And I didn't really think so. I thought that they're more like cash cow utilities, and yeah, you could hold them, but they're not the same companies they were anymore. There's too much politics getting involved, right? I mean, there are going to be congressional hearings about what can Apple do and what can Twitter do and what can Facebook do and what can Amazon do, and should you unionize them, and is it fair that should they have the Apple store? I don't know what will happen, but it doesn't feel like a nimble technology business anymore. So my passion for big tech, you know, uh, my passion for big tech kind of died down. We could say ameliorated. And then at the same time, my confidence in traditional treasury strategies languished. It was pretty clear that if you have $500 million in cash and the interest rate goes to zero, and it's going to stay at zero for 36 months, then it's like putting all your money in a savings account earning zero. Well, there's no upside. But if there's hyperinflation in assets or asset inflation, and you're holding all your money in cash, not only is there no upside, but you realize that there's downside You know, the real yield on cash is negative, but if you're tracking asset inflation, it becomes negative 20%. So if you want to be rich, or if you want to get rich, you can't track CPI. You have to track asset inflation. And so, you know, you look at the S&P 500 and you say, well, I mean, that's the hurdle rate. So I think in March of 2020, you know, I realized that you couldn't continue to hold cash, and the best idea probably wasn't the big tech trade anymore. So what is the best idea? And so that drove me on a search, and I found Bitcoin because I had a problem, and the traditional solution didn't look like a solution anymore. It looked like the bloom was off the big tech rose. So what would you like? You would like to have a big tech network that has like all the dominance of Apple or Google or Facebook, but without the company attached. So Bitcoin is big tech, but without the company. What you're getting is just the pure big tech network. No CEO, no board of directors, no product, no iPhone. There's no employees, so there's no one to unionize. You don't need an iPhone 12 to be competitive, because the product of Bitcoin is just a Bitcoin. And if Bitcoin just gives you 1/21 millionth of the network now, it's quite reasonable that 1/21 millionth of the network in 100 years is just as valuable, probably more valuable than one Bitcoin in 100 years is more valuable than one Bitcoin today. But you can see that one iPhone 3 today is worth nothing.
Mm-hmm. Yeah.
And one iPhone 12 in 100 years will be worth nothing. So the product that Apple is selling isn't going to last 1,000 years. The product that Bitcoin is selling is 1/21 millionth of all the money in the world. That doesn't have to change. It just kind of has to not break. So what I liked about Bitcoin was it was a digital gold or a digital property that you couldn't inflate. And it was on a big tech network that you could accelerate using computer technology. So call it digital gold without all the imperfections of gold. But the big tech element meant that you could plug layer 2 and layer 3 applications into it, like Square Cash, Lightning, Apple Pay, Google Pay. And if I plug applications into the Bitcoin network, then I can create smarter, faster, stronger gold, smarter, faster, stronger property. And pretty much the core principle of how you get rich or how you stay rich in the 21st century is you dematerialize something from the physical world to the digital world, and you make it smarter, faster, and stronger. If you digitize music, you create Amazon and Apple Music or Pandora, it's smarter, faster, stronger, and you give it to billions of people. And if you dematerialize CDs and DVDs or dematerialize concerts and Broadway shows, and you have YouTube. And if you dematerialize every library and every book and every university on the planet, you have YouTube and iBooks. And so the digital transformation of information and entertainment is how you provide joy and education to the world. Ergo, the digital transformation of property is how you provide wealth to the world. It's a very simple idea. It's not only Bitcoin, it's all the applications on top of Bitcoin, of which you've got PayPal and Coinbase and Binance and Square, but you have the BlockFi credit card. But MicroStrategy is an application on Bitcoin. Like our stock is a layer 2 application. Our debt is a derivative of Bitcoin. Our converts are derivatives of Bitcoin. So all sorts of things can plug into Bitcoin, And all of them are, in essence, they're building applications and platforms on top of digital property in order to construct the 21st century cyber economy smarter, faster, and stronger, thinking a billion times a second, moving at the speed of light. So, that's how you do it. That's how people create value. You either build on the internet platform or the PC. Thomas Watson built on the mainframe platform, and Bill Gates built on the PC platform, and Jeff Bezos built on the internet platform, and then Apple came back and revitalized on the mobile platform. And now you got, the next platform, digital property as a platform. It just made sense. So I discovered it because I had a problem. We adopt it first defensively in order to avoid losing all our money. Like if I told you, Natalie, I'm just going to take all your money next Tuesday, all of it, you would spend between now and next Tuesday researching to figure out how not to lose your money. But then after we figured out how not to lose all our money, we started thinking maybe we can use this offensively in order to grow the business. And that was serendipitous. It wasn't obvious to me all that would happen. But, the truth is, when I started in business, if you'd asked me what success was, I would have said success is if I could have one day afford to hire 10 people. And if you'd asked me at 10 people what success, I would say maybe one day we'll have 100 employees. It's like success is iterative, and you keep finding the next thing that you might be able to do. And so opportunities present themselves organically once you get into the market.